Okay, let's dive right into this. Welcome to today's explainer on online trading, a beginner's guide to building wealth. Our main goal today is to show you how to take a surprisingly small amount of money and actually use it to pour the foundation for a rock-solid long-term portfolio.
I want you to imagine taking just $100. Historically, people might just see this as spending money for the weekend, right? Maybe a nice dinner out. But thanks to the modern digital gateway, we're going to see how this exact amount, just $100, can absolutely become the bedrock for your entire financial future. Now, what's really interesting about this slide is the massive shift we've seen. Not too long ago, investing felt like this incredibly exclusive, gated community. The old way meant you needed thousands of dollars just to open an account. And honestly, you basically needed a Wall Street broker or a fancy finance degree just to decipher the paperwork. But the new way, the landscape has completely flipped. Today, all you need is a smartphone and a few spare dollars. It's incredibly accessible to everyone. You can literally own shares in the biggest companies in the world right from the palm of your hand. But with those gates finally wide open, it brings us to a really major crossroads. Where should beginners even start? Like, what assets should you actually be looking at? And maybe more importantly, what kind of traps do you absolutely need to avoid? These are the crucial questions every new investor faces, and we are going to break down those answers for you right now. Let's start with the basics. What actually is online trading? Well, at its core, online trading just strips away all those expensive middlemen. It is simply the buying and selling of financial assets through internet-based platforms. That's it. No complicated jargon, no awkward phone calls to a broker. You are entirely in the driver's seat of your own financial choices. It's designed to be completely seamless, putting the ultimate control of your portfolio right into your own hands. Now, think of the market as a massive toolkit. Inside, you've got different financial assets you can buy. You've got stocks, which are great for growth. That's basically owning individual pieces of a company. Then you have ETFs, or exchange-traded funds. These are brilliant because they bundle multiple assets together, giving you instant diversification. Then there are bonds, which give you stability. You're essentially lending money to an entity. And of course, there's the volatile but super popular modern frontier of cryptocurrencies. When you break it down into these categories, building a portfolio instantly feels way more manageable, doesn't it? But here's a totally fair question. What if one share of a massive tech giant costs, say, hundreds of dollars, and you've only got that initial $100 bill? Well, this brilliantly illustrates the magic of fractional shares. This is arguably one of the greatest retail innovations in modern finance. It means owning a piece of a company without buying an entire share. You don't have to buy the whole pie anymore. You can literally just buy a single slice. It completely shatters that old barrier to entry, meaning you can start investing in top-tier companies with as little as a single dollar. And please, forget that stressful Hollywood image of investing. You don't need 6 monitors glowing with matrix code. You absolutely do not need to predict the next big tech unicorn. You don't need to day trade every single hour. And as we just saw, you don't need a large amount of money. Successful investing really isn't about perfectly timing the market. It's about letting go of all that unnecessary pressure and playing a much smarter, calmer game. So the crucial point is, what's the actual roadmap? Well, here it is in 3 simple steps. Number 1, focus on diversification. You don't want one bad day in a specific sector to wipe you out. Number 2, invest consistently. Make it as habitual as paying your internet bill. And number 3, think long-term. Just zoom out. If you let compound growth do the heavy lifting for you, you can build wealth steadily without any of that daily anxiety. There is a classic philosophy in finance that goes like this. The best time to start investing was years ago. The second best time is today. It's just so true. It's fundamentally about patience and discipline. It's about taking action right now, today, regardless of whatever you did or didn't do in the past, and letting time become your single biggest advantage. So, I really want you to lock in this mindset. Start small, stay remarkably consistent, and think long-term. Always keep your eyes on that horizon. If you can internalize these 3 mantras, you are genuinely setting yourself up for real, sustainable financial growth. Those old Wall Street gatekeepers, they are completely gone. The tools to build generational wealth are quite literally sitting right there in your pocket. Your journey begins with a single, decisive move. So the only question left for us to ask is, what will your first investment be today?